Hey everyone, welcome to another video on the channel. Today we're going to be looking at a new stock I haven't covered previously. It's Vermillion Energy Incorporated, also known by the ticker symbol VET. Vermilion is a Canadian energy company, which I think has a ton of potential upside, although I'm not a financial advisor. Do your own due diligence, but there's several reasons why I think Vermilion is really a bit of a diamond in the rough here. I have heard virtually almost nobody talking about this stock. I think it's basically flown under the radar, but I think it has a lot going for it, which we'll get into. But before we do that, let's take a look at the chart. So we could see over the past 6 months that the stock has had its ups and downs. It's mostly been trading sideways in the high teens, low 20 area, up until this big run up at the end of August where it went all the way to $30 before now it's been sinking back into the mid 20 level. So what does that mean for us? Clearly, I think the stock is going to go up and down based on energy prices, like many of these energy stocks, but there's a few particular reasons why I highlight this energy stock over some of the others. And one of the biggest reasons, if not the biggest reason, is because Vermilion has a ton of exposure to the European natural gas market. Now, I'm sure everyone is aware of the whole situation with Russia and Ukraine and how that has been broadly impacting energy markets around the world, particularly in Europe, where they're just paying an arm and a leg for natural gas that used to come over those pipelines that now it's not coming over as much anymore. And so Vermilion, I think, is very well positioned to take advantage of this. And so what's going on with Vermilion? One thing I thought was remarkable about this stock, and it's in this little graph right here, shows it. The company's free cash flow is such that it can make its entire market cap and free cash flow between 2022 and 2024. I mean, that is impressive. That is impressive. But that's not the only thing going for it. So let's take a look at what actual oil and natural gas production fields the company owns. We could see that it's based in Canada. Over half of its production is in Canada, but it also owns pieces of production of fields of oil and gas in Canada, in Europe and Australia. Particularly, it operates 2/3 of the country's domestic oil production in France. It's the number 2 onshore gas producer in the Netherlands, and it owns a stake in Ireland in the Corrib Natural Gas Project, which that was a more recent acquisition for the company, which I think maybe it turned some investors off because the company does have some debt, and this is just adding to it. But I think it was very strategic and well placed for Vermilion in order to take advantage of the increasing prices of natural gas in Europe because of what we were just saying, because of all the geopolitical risk. So the gas field, the core field, provides about 60% of Ireland's natural gas consumption. That's going to be a bigger part of their holdings and in their export to get that out into Europe. You know, another thing, we talked about free cash flow, but what's the company doing now? So they're generating all this money. Where are they putting it? Well, it turns out that they're actually buying back shares, which is awesome. So in July, they announced a share buyback for 16 million shares, or approximately 10% of the total float. That's great. And not only are they buying back shares, but they're also increasing their quarterly dividend by 33%. So great news there. Share buybacks, increasing dividend, geopolitical risks and threats that are going to work in Vermilion's favor. All good stuff. And so this is a little bit old because they're earnings were released. I mean, not that old, last month, but I mean, let's take a look at this. So they reported second quarter of 2022 results with FFO of 453 million, up 16% quarter over quarter, not year over year. It's up 162% year over year. So that's great. And this is what I was kind of saying before. So the European natural gas import price has increased from $10.30 on June 30th of 2021 to $34.35 on June 30th of 2022. So it's literally 3x in the past year. So that's great. This analyst is saying the company should be worth $47 to $49 per share. They're trading at $24. I mean, there's a crazy amount of potential upside that hasn't been priced into this stock yet, because specifically of these geopolitical concerns that we were saying and the increasing price of natural gas and oil, particularly in Europe. Because, I mean, all natural gas is not created equal. I think that's kind of gets lost in the equation, because I think people think in terms of, well, it's like a global market for this energy. So, they maybe look at America, wherever they're based, and they kind of extrapolate, but that's not really a fair comparison because of this whole situation with Russia. I mean, this is remarkable to those of you who haven't seen or aren't aware. So Russia right now, because they can't sell that gas to Europe, they're just flaring it, which means that they're just burning it off instead of putting it through those pipelines. So I mean, it's just literally being burnt into the atmosphere, all this natural gas. So what does that mean? It means, obviously for the people thinking about the climate, that's not good with all this fossil fuel being just burned into the atmosphere. But it also means that the Europeans are going to have to go someplace else for that natural gas. Where are they going to go? I mean, they're going to go, we know they're talking about building new pipelines to like Azerbaijan and into the Middle East, across the Mediterranean to get some of that Middle Eastern oil. But why not? They're also going to go to Canada and some of these friendly nations that have no risk of, or very little risk of, geopolitical threat. So Vermilion is just going to benefit from that. I mean, this number is crazy. So Russia is burning the equivalent of 0.5 of percentage of daily EU needs. Russia's just burning off. I mean, that's an insane amount of natural gas. And, they're not going to not burn natural gas. They're not going to just swallow that loss. They're going to get it from someplace else. And one of the places they're going to get it from is Vermilion. So let me know what you think. If you're looking at Vermilion Energy, if you think they're a buy, a sell, a hold, and what you're doing with your shares. And I'll catch you in the next one.